Hey everybody, Doc Severson here with you, Ready Set Crypto. I got Mav from Los Angeles. How's everybody doing today? Great to see everybody online. Today is the 2nd of October. We're in the last quarter of the year. So how's everybody doing out there? Let us know where you're dialing in from, calling in from, yelling in from, connecting from. Love to see everybody on board here. So we have just finished up a whole bunch of travel, and I'm not sure if we have anything scheduled. So Mav, where have you been lately?
Yeah, I just got back from Philadelphia, where I was at Coinvention. Uh, Good time, small scale conference, but definitely it's important to. I like the big ones just as much as the more intimate ones. And yeah, we got back from Bali, and I also went to Singapore. So lots of cool things going on. Good to see people, and yeah, just back in the saddle here.
Well, you did like a full tour of Asia. I mean, let's
Yeah.
see, Singapore. You went to Bangkok. You went to Japan.
Mhm. Yeah.
Let's see, have we missed any Asian countries that you went to?
I went to Seoul as well. I don't know if you
Seoul,
mentioned
yeah.
that. Yeah.
Well, no, you actually went to Seoul, right? I mean, I just stayed at Incheon, and you you took the added step of going into Seoul, right?
Yeah. Looking for a soulmate.
Oh my God! All right, so we got Chicago, we've got Czech Republic, we've got London, and it sounds like his cold is doing better. Calling in from Hamburg.
Mhm.
Great to see everybody on board here today. So we've done actually quite a bit of live stuff lately, just because we've had a lot of market movement, and so there's a little bit of a pause in the assault, and now it looks like the equity markets are taking up the baton and running with things. So, Mav, I'm gonna cut you out of the pie here and jump over here to the live charts. This is the S&P 500, which is the main arbiter of value in the US stock markets. It's not the Dow like everybody talks about in the mainstream media. It is the S&P 500, which is worth about $30 trillion. Here are all-time highs right up here. So we have all-time highs right up there. And so you'd never know it talking to all the people that are out there. You'd never know it because you'd think that the world is coming to an end. I mean, we're literally within a couple of percent of the all-time highs, and everybody's just completely negative, freaking out, thinking that there's going to be a recession right around the corner. So if you were to trade in the same direction as everybody else right now, based on all the articles that are in the media, as well as what's in the papers, as well as what's in, every financial media site, you're getting ready for the recession. You're looking for, you're talking inverted yield curve. You're sounding oh so impressive when you talk to that point. Right? And so you're looking for ways to make money on the way down. And this is why I'm thinking, and just in the back of my head, that markets love to absolutely screw every last trader that follows the mainstream opinion. And this is why I'm looking for markets to perhaps finish this little shakeout down here and then boogie to the upside. So that, again, this is the S&P 500. This is the U.S. stock markets. There's a lot of things that are very correlated along with this. So I don't have to predict the future, though. What I can do with this, and this goes towards anything that we trade, is kind of put this thing into a box. All right, put this into a box and say, all right, if we end up trading lower than, if we end up punching through into new lows, then what that means is that any bounce up from here is more than likely going to create a lower high, and then we're going to start the process of transitioning into a downtrend, or at least at the very least a corrective pattern. And if we follow the 2007 analog, it may take quite some time before we get the real selling to come on board. Okay, that's one way. On the other hand, if we end up bouncing up through here, then this is just another lower high unless we're able to punch into new highs. So this is kind of what I was hoping that we would see. I was hoping that the market wouldn't try to take a try a breakout from here because it just doesn't have the power and the energy to do that. Many times, you guys will see this in the markets. You've got to basically go lower if you want to go higher. You got to take one step back before you take one step forward. So I'm going to do one more thing here, Mav. Sorry to scare you here, but we're going to go into take a look at Bitcoin because that's what y'all want to talk about. So Bitcoin right now, and we don't even need the fancy indicators on here. We can go with just price and volume. And right now what we're seeing is after range expansion, we're seeing range contraction. So what I've been telling everybody in our Omnia group, our awesome Omnia people, is that I believe the price is going to stay within this range here between 8,000 and 9,100. It's going to shake and bake inside this area until it's ready to move again. And right now it's acting like it's a bear flag. I'm seeing the volume kind of coming down in there. This is a consolidation pattern within there. A lot of times the bear flag only shows a halfway house in the middle of everything else. And so we may be on our way to 6,500. Don't be surprised if we end up hitting 6,500 in a month, somewhere in that area. Now, we've also seen things happen where it just didn't work that way, right? It looked like it was going to bottom out and then keep on going, and then it just turns around and takes off again. I don't know that we necessarily have the negative sentiment to do that just yet, right? So let's go back to off the charts. For markets to really head higher with gusto, you've got to push things down. You've got to get things so stinking negative that everybody has just given up on it. And that's the toxic sentiment that's required to get these massive moves to get to the upside. So again, keep in mind, guys, keep your head on your shoulders through this. Understand that if you want it to go higher, you've got to go down first. So a lot of people talk on there, and we've seen it in the chat on our YouTube Ready Set Lives here, is that I wish we could just get rid of the bears. If it wasn't for these bears, then the markets would just go higher. No, it doesn't work that way. For something to go higher, what you've got to do is you've got to get one side of the ledger completely and totally committed with weak hands, and then you turn the tables on them, and that's how you get the price to go screaming higher like that. So be glad that the bears are on board. So even though you're cursing them with every last breath right now, be glad that the bears are on board, because if you want this thing to head higher, you've got to have them as part of the mix. There's not really much else worth looking at right now. Bitcoin is still the only asset that is in a primary weekly uptrend right now. So everything else is just going through the forest fire of crypto right now. What you got, Mav? And I'll look for any questions if I can answer any questions offline. So over to you, my friend.
Yeah, that's a good segue, because I think where we are right now with Bitcoin and the entire crypto market is this sort of, well, what's next kind of feeling. Certainly within, the technicals, but also the fundamentals. What does crypto represent right now? And I think that's why we're getting some bearish tendencies, is that, we're hoping for things to turn around, but what's the catalyst of that? So I've got a death by PowerPoint ready for you. Here we go. You see that all right?
Yeah, it looks great.
Okay. So let's get this.
I wonder if we can click on that and have it maximized. No, I guess not. I guess we'll just go with that.
Ultra wides, working on the setup here. Anyways, so yeah, the question of what is blockchain's holy grail of adoption? What is the catalyst of adoption as it relates to what's going forward from here? I think this is the question that gets asked a lot. It's sort of that thing we're always chasing after. That's why I refer to it as the holy grail. It's that sort of, if we could just get that, we would accomplish what we're seeking here. But it's so frustrating. And as a reminder, this is what we talked about last week. We're in fear mode right now, or we were definitely last week, and I had to remind everyone to chill the F out. So and yeah, here's some of the points that I made in last week's live stream if you weren't with us. just that, as it relates to the short to midterm, we're about to see the Bitcoin halving in less than a year. Definitely, as a reminder, definitely look at this Medium article that I've got linked here about talking about this sort of stock to flow, why Bitcoin has value as it relates to scarcity. It's really great. Another thing is that the Bitcoin hash flash was not a big deal. Things are fine in terms of we're hitting all-time highs with the Bitcoin network is doing fine. That was another thing that seemed to scare people and add more fuel to the fire, but ultimately it was just it was unsubstantiated. The network fundamentals is still solid. Bakkt was sort of a small launch, not the launch that people were hoping for, but I have to remind people, I think after its first week it did about 6.8 million in total volume, and some people are disappointed by that, but for me, that's 6.8 million in institutional volume. Very well regulated, very well backed up, unintended, trading volume that is, I would say, much better than the volume we see on Binance or Kraken or whatever, because this has the backing of Wall Street and institutions, and like it or not, that is a step forward in terms of the proliferation into bigger and better markets.
Institutions are notoriously, they're notoriously, they've got relationships built up over decades. Like right now, there's still the CME, and for an institution, a five Bitcoin contract is not a big deal. For a retail trader, it's huge. It's ridiculous. But for an institution, a five BTC contract is no big deal. With the Chicago Mercantile Exchange, so it's tough to get something that has more clout than the CME. But so Bakkt has got to come in there and say, hey, we've got something different that you need to use. So It may take a while to get the adoption with the institutions, and there is no route right now for retail to jump on this contract.
Right. Bakkt, in how I see it, it's a lighthouse for the sort of institutions to start navigating the crypto space. It's the first of many to come. It's an important first step, and obviously it's not what were people expecting, like a billions of volume on day one? No, it's going to take time to matriculate and grow up, and certainly looking at the larger markets right now, that's where people's attention is focused. As Doc just talked about, there's a lot going on there. So we're just kind of relegated to the side right now, and we're unfortunately dominated by the larger trends, but that's okay, because what they have to lose, or what the larger markets have to sort of shed, we are going to be the receivers of. We're going to be able to step into that void and operate there. So anyways, that's another thing I had to stress, is that price does not equal value. Doc often talks about price being a really good arbiter of how to read a chart and things like that. But this is a different discussion as it relates to price does not equal value. You look at it from a fundamental perspective. This was a great article by Pompliano, sort of talked about this, where it's Bitcoin isn't a trade. It's not just a 1 day, 1 month, or 1 year type outlook. It's a multi-decade trend, and essentially you're investing in the future. It's the ultimate game of patience. So anyways, that's all kind of recap from last week, and we definitely needed to talk about how this quote was really in line with what Doc was just talking about, how this is a great opportunity if you're looking to buy more. I can't put that into simpler terms for you guys. Like, it's when the market goes down, if your investing horizon, if what you're looking for is to stack sats, I think you should be looking for lower prices. If you're a believer in the long-term outlook of the asset that you're investing in, be that like a stock or whatever, or Bitcoin, then you should hope for a market that gives you opportunities such as these, so that you could operate on that. You are obviously, it's great to be excited when the price goes higher, but really you should be more excited by when it goes lower, if that's what your intention is. So anyways, so Doc and I just got back from Bali, as we talked about at the beginning of the stream, and we went to this mastermind group. And one of the things that we talked about as sort of a hypothetical is what would bring 3 billion users to the blockchain space. And some people talked about how, oh well, you've got things like Libra and Bakkt and institutions, and we're building out to all these different use cases, and it's going to be great. And there's definitely different avenues that we could find users coming into the space, and it's really just a user experience question. And this is kind of hinted at or talked about from last week when we talked about just the characteristics of what Bitcoin and cryptocurrency represent in terms of store of value, similar characteristics of cash, and that they have growth characteristics of a new technology. It's important to know that it's essentially at this point a hedge against a lot of the global central bank race to the bottom policy, monetary policy that is all about negative interest rates and printing just bucket loads of money. And that's definitely for sure a catalyst of this space, is to serve as a hedge against that. And that's definitely something that we've talked about before on this our live streams here. So that is one good catalyst to look at. Another one is this is just from like a Forbes article that was put out a little bit ago, and they talked more about the ideals of decentralization, certainly the financialization of Bitcoin, more Wall Street institutional players, and you've got a younger crowd. Bitcoin and cryptocurrency and blockchain are just more in line with the idealistic millennials, Gen Z type users than the older system, which in their opinion has failed them. Graduating into a job market where there is very little prospects because of runaway bank greed, essentially, is definitely not a good impression to make upon a emerging generation. And so, yes, by and large, millennials feel very let down or distanced from institutions and big organizations like that. So they're looking for alternatives. They're looking for a system, excuse me, that better respects their individual sense of morality and what they feel the future represents. So that's also a really good catalyst. But I don't think that's what's really going to bring 3 billion users to space. It's going to be a great start. Both of those catalysts are very, very important things. But for me, the big catalyst, the holy grail that I think is going to be what drives adoption for this space, is the synthesis of blockchain plus IoT plus AI and many other emerging technologies, but those three principal ones. I've referred to this as the new digital economy. You might also hear this referred to as the machine economy. And it's important to understand this through the context of when you talk about users, to me, that's a literal of, I don't see that as just human users. When I talk about, and I want to think about 3 billion users utilizing blockchain, I see those as devices on a network. I see those as, machines paying each other, microtransactions, something that is definitely not possible in the, Swift dominated networks of today. You just can't pay like a fraction of a fraction of a fraction of a cent for server uptime or power or whatever. But you can definitely do that once you have a network, a transaction layer that facilitates that by design. So that is something that I think is just so intrinsically important to think about as it relates to adoption, as it relates to usage for this space. I don't know what it exactly looks like, but I like to imagine some sort of automated factory where you got a bunch of those Amazon robots running around and they're talking to each other using the mesh network I talked about in the video yesterday. And they're uploading via 5G to some sort of blockchain supply chain, and it's all getting orchestrated by an AI system, like AIoT system that orchestrates it all and then puts it on an automated ship and it gets shipped overseas, things like that. That to me is so much more promising, so much more interesting, so much more potential is intrinsically there than talking about, oh, well, if only we could just get Libra to launch or Google's blockchain solution or something like that. To me, the representation of blockchain in a larger economic sense through something like the machine economy has so much intrinsic value inherent to that equation that it cannot be like this is definitely going to happen, and is definitely, to me, the base protocol layer of the new economy is to have a blockchain integrated with many other emerging innovation platforms such as IoT and AI. So that's that. We can keep going on this, but I think I don't want to boil the ocean here. But it's definitely something I think is super interesting to think about. Something there's not a lot of literature or research done right now because it is nascent by design. But to me, that is a direction of this space. Not the only one, obviously, but one that is super important because when we talk about things like the blockchain trilemma of faster, cheaper, more secure, and how it's really hard, you can only pick two of that. That's what Vitalik says. To me, there's a fourth element to that, and that's user experience, or the sort of intangible. Like Apple obviously doesn't make phones that are faster, cheaper, more secure than their competition. They haven't for years. But people still continue to go back to them and buy iPhone 11s that look silly with all cameras on the back because they provide an experience. It's that familiar experience. It's that user adoption through, just a superior user experience for the people that like iPhones. So, anyways, that is sort of the end of this little spiel here. I hope that was a little bit kind of fun for you guys, but this is something we talk about pretty frequently in Omnia in terms of what is the future of the blockchain space? Where are we going? Where's the opportunities? This is something that just lights a fire under me. And like, this is, to me, the conversations we should be having just as much as, we should be talking about Bitcoin's price and things like that. So anyways, going to get off my little soapbox here.
Oh, stay on it, man. You're on a roll. There was a fair amount of questions that probably were better suited for you. Well, looking at the new iPhone, I keep wondering when we're going to have a phone with like cameras all over the back of it or something like that. Just a whole, or it's just a globe of cameras. BTC is king.
Yeah, and I purposely did not name any crypto projects throughout that presentation, other than Bitcoin, obviously. Not saying that Bitcoin is the end all be all, but to me, right now, what it represents as the state of the market dominance and just where we are with the space is that it is the literal manifestation of blockchain and cryptocurrency. And until we see more stratification into other use cases and we see that justified by actual investment and development, we're going to be in this sort of holding pattern, and we're going to explore layer 2 and things like that. So that's not a great answer, but that's where we are right now. So yeah, things like IOTA, that was cool. I don't know if that's what will facilitate the machine economy. I'm not trying to say one way or the other. I'm saying that it's part of the direction. Bitcoin could be part of that, whatever. There was also some points made about gold and things like that, and this to me is where we start to see sort of the branching off of that, because historically crypto assets have been defined by their relationship to gold or like digital fiat and things like that. But once we start to see it really have that utility value, once we transition from how Chris Berninsky talks about speculative value versus utility value, once we start to make that transition, I think that's when things really start to take off in the space. So anyways,
somebody was asking you for your thoughts on SolveCare.
I'm not familiar with it. I'm sorry. I'll look into it. But that's cool.
Mark is asking, how is this consolidation different from the previous time we hung around 7,000 and broke higher instead of lower? You mentioned thinking that scenario is unlikely at the time. How is this one different? Everything is different based on what you have to understand is why the price is moving to begin with. And people forget the human element of price discovery. right? You guys all look at the price chart just as a bunch of candles and you think that it's some algorithm behind it, or you think that it's going to turn because of a stochastic or some kind of MACD turning it. No, it's actual people behind it. And people and their sense of fear is what drives markets. So fear, to me, people talk about fear and greed driving markets. I think it's just fear. Fear of missing out to the upside, fear of loss to the downside. It's all about fear. Fear is the dominant emotion. And so what we had was we had a different element of fear on the upside during that, because we were just coming out of the basement on crypto at that time. And so the fear was fear of missing out. And right now, when you get the market that's gone from 3,000 up to 10,000, then all of a sudden the fear shifts over to fear of loss. And this is why I felt that the move would be to the downside first. Now, this is what we need to do to get it to go back up again, but we've got to have capitulation before that occurs. So we'll see what it takes to get this thing to shift.
Yeah.
Bots are programmed by people. So to me, bots are the same thing as people. They've been programmed by, unless we have, Skynet out there programming their own bots, but basically bots are programmed by people anyway, so it doesn't matter. They're just another autonomous person.
I haven't talked too much about Ethereum recently. I did a video right before I left for Asia, talking about how I was kind of disillusioned on Ethereum, and then I sort of saw that there still is good things happening, but Ethereum is just trying to be so many things at once. So that to me is the challenge, the opportunity. There's just so much that needs to be done, but at the same time, you're absolutely right. It's still the biggest dev community. I really, I love going to developer meetups and talking to what people are building and Solidity, and it's still very nascent, but it's definitely still active, even 2 years into a bear market. So that's awesome.
Hold your breath. We don't have to have a capitulation. Well, what you've got to do is you've got to get a shift in sentiment. You've got to get too many people on the wrong side of the ledger. That's the only way that you get price to move. It doesn't happen. Price doesn't decide one day to wake up and say, you know what, I think I'll just accumulate today. No, price moves because people are getting spanked. That's how you get the big moves in the market right now. So what we've got to do is, if you want this thing to go higher, the bears have got to get spanked for this thing to go higher. So whatever you want to call that, I call it capitulation. Capitulation is when you wave the white flag and say, I give up. So normally you see something like that happen on a big volume spike. We didn't really see it last year happen on a big volume spike. It was just sort of like a sustained grind, and finally it just sort of lifted off from there. Very unusual. So just about every bear market I've seen will terminate on, that's the point at where the maximum number of people just puke out, and then the institutions or whomever is holding the smart money says, thank you very much, I'll take it from here. Couple other questions, and then we'll head for the hills here today. Thanks for showing up here, guys.
Yeah. Let's see. There was a question about what Bitcoin will Bitcoin be successful versus the regulatory and governmental challenges. Obviously, no one knows the future on that, but I think at this point, there was a great article. Bring up again, Pompiliano just talked about tokenizing the US dollar and what that would look like. And his thesis was kind of around being competitive with China. I don't know if I totally agree with all of his points, but it's still very interesting to talk about where we're at right now, where we have been with regulatory challenges, and the evolving nature of regulation versus the cryptocurrency space. I don't think we're in a challenge state so much as an exploratory. How do we define this? How do we make it work with our existing systems, or do we need to update our systems to make it work? I don't think we're in a. There's not like this pressing fear of just this big ban hammer coming down and saying no more Bitcoin, because they would have done that already. And furthermore, I've talked to people that are involved or close to the systems involved with that here in the U.S. And there's no intention to do something like that. It's more about the bad actors who are utilizing a nascent technology for ill-gotten gains or malicious intent. So yeah, that's where we are.
Okay, looking for any final questions here. We'll just take one or two more and then say adieu to you fine folks. So if anybody from our, so there was a question about the RSI Laguerre study. That is something that we provide for free with the Omnia service, and it's a combination indicator of, it is the RSI, or Relative Strength Index, in Laguerre time, which is not linear time, it's Laguerre time, so it's more responsive. And it includes the choppiness index, which is a default function, which is in TradingView, which is what we use to measure market energy as part of our fractal energy trading methodology.
Yeah, it should be interesting to see what the SEC is just a policeman. I hope people understand that. It's where we need to be talking about is Congress and legislation, because the SEC is just going to enforce the rules as they feel that they're written. So yeah, for us, it's a regulatory battle through legislation more than just trying to paint the SEC in a negative or positive light. And yeah, it's going to take some time, but it's a fight worth having.
Hey, Brian, I don't know where Bitcoin's going to be. Save those for the headlines. I will challenge you guys. Like, is there anybody out there, have you ever made money based on something that was printed in the media? And I would say for the most part, it's going to work against you. So everybody's out there combing Twitter, combing out there on the websites, looking for the news sites, and quite honestly, it's not going to be a money-making strategy for you guys. More than likely, any positive news is going to get you in at the highs, and the negative news, that's where markets will turn around on. So it's always going to be a very contrarian thing. So try to stay away from the news, guys. It's just not going to help you. Find some trusted, selected sources to take direction from, which is why I always fall back on the price. The price tells you everything that you need to know right now about the value of what you're looking at.
Yeah, and stay away from guys making price predictions like McAfee. If you want me to talk about the validity of a $1 million Bitcoin prediction, the only way I would characterize that is if you were to price Bitcoin based on the scarcity of gold in the supply system, it would be worth about $1 million per Bitcoin. That's really the only metric I want to, otherwise we're just going to be painting numbers on the wall and throwing darts at them. It's I've never seen the point of making arbitrary price predictions because we're still 95% speculative.
It's fun, right? It's fun. It makes for good copy. People read that stuff. It's like a clickbait title, like, oh, 100,000, a million. Like, ooh, people, their pheromones shoot up when you read something like that. It's like, oh, maybe I'm on the right side of history for once. And it's the real work, how you really make money in this business is difficult. It's tough. It's tough work. And it's not made by reading headlines and speculating based on what some schmo wrote, that doesn't know the future. Nobody knows the future, So somebody was asking in here, let's see, am I still buying at these levels? So here's what I do is I sell puts on the fear. So we just did an option class, which is a couple months ago, and I showed you guys how to sell puts into the fear. So you're able to basically get paid for the pullback if it occurs. And then you can commit to buying at those levels if you want to. So I think selling puts is a much smarter way to accumulate, whether or not you're going to get sats and earn income, or you can even be assigned the underlying asset at that point, depending on who you use as a broker.
Yeah, and there's a lot of questions about bull markets, and we get these questions every live stream because we're right there with you. Like we're waiting for things to pick up. We want that energy back. As much as we want to say, like, it's great to be buying at these levels. It's, anticipate things could go lower, things like that. At the end of the day, we want the juice back. We want the crypto of 2017 for all the negative aspects of it. We want that back because as much as it was a runaway hype train, there was also a lot of things being built, and there still is that, but
It won't happen in the same manner because I mean I've already lived through
Yeah.
this before. I lived through 1998 and 1999. Some of you weren't even alive at that point, and it's things like that typically don't repeat. It's like lightning hitting at the same place. It took several years before we got our kind of a repeat of that type of market where it was just a frenzy, just an absolute frenzy coming in. So 2017 reminds me very much of that same frenzy. And it was funny because when I first started working with you, Mav, I was like, wow, look at this stuff. Like, where's your exit? Where's your exits on this stuff? Because that's what you want. You want to sell into strength on this stuff. All right. Hey, everybody. Thanks for hanging out with us today. If there's any other questions, let us know. We're always out there for taking questions through email. You can reach us at support@readysetcrypto.com.
Tech Guy had one more question I just want to address. He asked, what is the timeline that you need when you go through Omnia to do the classes that we have? I mean, if you've never done trading before, I would think you're going to need some time to really sit down and digest that stuff. But if you need to, we have a 3-month code on our free newsletter, which you can get to at rcnewsletter.com. You can sign up for, and that gets you a discount on getting 3 months at a time, or you just sign up for 1 month. Just take your time. I would fully encourage you to it's not something you're just going to pick up overnight, but
it's a lifelong skill though. It's not something that just goes away. Like, well, I used to know how to do that. No, it's something that if you commit to this, it's something you learn a lifelong skill when you do this stuff. And then it just gets better and better and better. The things slow down for you. It's almost like in baseball where it's like, you can't hit a 100-mile-an-hour pitch. And then after a few years, things slow down and you can see the laces on the ball as they come in. Not me, but this is what I hear from people that can't hit a 100-mile-an-hour baseball.
Yeah.
But things slow down for you.
Yeah. Yeah. Not to boil the ocean here, but if we do see things, we are going to see things start to get very interesting in the global markets. And I think just having a trading perspective, even if you're more fundamentally oriented like I am, just having that is going to better prepare you to know where things are going and how to better read that what price is doing. So yeah, it's something that we take very seriously, and we're all about providing honesty and making sure that you guys are just in it with us. This is not about us pimping some thing that we don't believe in. We believe in teaching people how to fish, and that's the baseline of what we do. So anyways, yeah.
All right, last question. I'll let Brian grab the last question because he's got the same question everybody else said. What are your opinions on the financial crisis we're going through, the inverted yield curve? Yeah. Right. So if you read the media right now, everything in the media is negative. So today, the Dow's down 400, 500 points, and the market's just getting chewed up, and it's just one bad thing after another. There's uncertainty everywhere, but don't forget we're 2% away from the all-time highs. Markets, there's a saying that tops are a process, bottoms are an event. Like a bottoming usually, you see the V bottoms out there. Bottoms are an event. They're like a one-time thing. They're not a process. But tops are a process. It takes a long, long time for a market. So don't forget also there's a difference between the economy and the market. And people get them confused. They think they're one and the same thing. Well, the economy is going down, so therefore the market has to go down. No, the market can do whatever the hell it wants to do. And it will do the exact opposite thing that everybody thinks that it will do. So if I see everybody out there crying about the inverted yield curve, crying about the Dow being down 400, oh my God, oh my God, oh my God, this kind of thing, I'm starting to look for opportunities to go long. That's the way I have to think, because this is the way I've been trained over the years, is that only the opposites succeed. So with that, my friends, we're going to take off. Thanks for joining us here at Ready Set Live with Ready Set Crypto. So from Greenville, South Carolina, and
Los Angeles,
California, we are out of here. Thanks, everybody.
Stay good, guys.